Hi, everybody. My name is Joe Rand. I'm the Chief Creative Officer of Howard Hanna Rand Realty, and I'm delighted to present you with this Rand report, the quarterly market report for the third quarter of 2020. It was an amazing quarter, a part of a tumultuous, crazy year that we've had in real estate in 2020. And so we're going to go over all of the northern New Jersey counties, Hudson, Bergen, Passaic, Morris, Essex, and Sussex, and tell you what's been going on in the market. Give you an overview, and then we'll give you 5 takeaways that we have for the market, as well as graphs and whatnot for each of the markets. But what I want you to be aware of is you can get the full report, which is much more detailed than what I can do for you here on this video. And on the full report, you'll get all the graphs, all the tables, and everything else. So you can check that out if you go to hhrr.link/QMRNJ. Howard Hanna Rand Realty.link, hhrr.link/QMR New Jersey. You get the report. You can also get it from your agent. You can get it from if you look it up, you'll find it in a bunch of different places. But you can definitely get a report at that link. All right. I also wanted to just let you know this is the first report we've done as part of the Howard Hanna Network. We're very proud to be Rand Realty is very proud to be part of the Howard Hanna Network. You can see we've joined now the 3rd largest real estate company in the country, the largest family-owned company in the country, as well as a company that dominates the Northeast. You can see where all the offices are. It's the #1 company in New York, and now we're expanding into New Jersey. So we're delighted to be a part of that, and we're really happy to continue to do what we've always done as Rand Realty, which includes these market reports that we've been doing for almost 20 years now. So let's get started with that market report. So here's the New Jersey numbers, and the first thing I want to start with is the theme of the report is this. It's a tale of 3 markets. And that's been a theme we've been running with basically since the second quarter when we talked about being a tale of 2 markets. But now every quarter has been a completely different housing market this year. Here's what I mean. Look at the first quarter. The first quarter did not really get impacted by COVID until mid-March, okay? And then it kind of shut down for a while. And you can see that, so the first quarter market was really the continuation of the 2019 market. And you can see sales were up just a tick. Pending sales were up. The market was very hot. It was a very strong market that we had going into 2020. Listings were down 8%, which was a function of there being, we didn't have enough inventory. It was definitely a seller's market. You can see prices were up 6%. We had a strong, growing seller's market in the first quarter of the year. This is all regional numbers. Then the second quarter started in April 1, which was 2 weeks after COVID really shut everything down. It was after the essential services order came in. It was after the public health crisis really had become an acute problem. And you can see what happened. Sales were down 32%, and that was largely the result of challenges of getting deals that were already in contract to close. So remember, sales are closed transactions, title transfers. So sales reflects activity from the first quarter and maybe even from the fourth quarter, because it takes time to get a deal from contract to closing. But the title transfers were down because the pendings were down, as well as in April and May, the pendings were down, as well as the fact that we just had a lot of difficulties getting things closed with lawyers' offices closed and county offices closed and clerk's offices closed and everything else. But then look at the second quarter. The pendings were up 6%, listings down 30%. Now that's a lot better, I'll have you know, than we did in the New York region that we also cover at Howard Hanna Rand Realty. There, the pendings were hit a lot worse than in New Jersey. Pendings were actually up in the second quarter in New Jersey. Now pendings are new contracts, deals put into contract. So the fact that in April, May, and June, compared to 2019, we had more deals go into contract is really a statement of just how strong this market is. Because you would have thought that with agents being discouraged from showing homes in New Jersey, in New York, we weren't even allowed to show homes in April and May. New Jersey, we were discouraged, but obviously, you know, people don't really want to go look at homes in the middle of a pandemic. Sellers don't want to open up their homes. A lot of our showings were virtual and things like that. So really what that pending number reflects, pendings being really down in April and May, and then really up in June when the market opened up. Like the second week of June is when the essential services order lifted. The pandemic had started to ease. We started to get some results from all the precautions we'd been taking for 2 months at that point. So the pendings being up 6% was a reflection of being down April, May, up in June. Listings they were still down 30%. Listings were so far down in April and May, even the June recovery didn't help enough. Listings were way down because who wants to put their home on the market middle of a pandemic? They got their living rooms, a Zoom studio. They're not having any guests over. The last thing they want to do is let somebody into the house, bring their germs in. But you can also see, here's what's important. Prices were still up. Prices were up in the first quarter. Prices were up in the second quarter. The two completely different markets, the one constant, prices kept going up. Brings us to the third quarter, the quarter that this report's going to be about. In the third quarter, we have 3 months, June, July, August, September, of a roaring market. Basically, that strong market we had in the first quarter, which was held back by by COVID and by all of the governmental restrictions. In the second quarter, all that demand came back in the third quarter, and you can see the results. And on top of that, not only did all the demand that we had already that was suppressed come back, we had a new strain of demand that we didn't have in the first quarter, and that was all the people moving from Manhattan and other parts of New York City out to the suburbs. We saw the same thing in in the suburbs in Westchester and the Hudson Valley. Big spike in buyers moving out from New York City. Now, a lot of people have talked about this. My feeling on it, my read on it is that what we've seen, we're not seeing the death of cities. People are going to want to live in the city. What happened was, I think, all the people that were on the fence, that picket white fence, they were on the fence about moving to the suburbs. They were thinking about doing it this year or maybe next year or maybe the year after that. They all said, let's just do it now. They all accelerated their decision-making process. So I will bet you that we will see a decline in people moving out from the city in like 2022. Probably not next year, but by 2022, there'll be a decline because we stole all those buyers into 2020. And we've got them all buying homes now. I think what COVID did was push people in dense environments who were already thinking of leaving and pushed them over the fence. They were already on the fence. But I don't know if it pushed anybody up to the fence and then over it, or at least not that many people. So you can see the results in the third quarter of all this extra demand. Sales were up 6%. Now that's even with pendings being being down for April and May, and pendings in the second quarter become closings in the third. So sales were up 6%. Pendings up 48%. That's a staggering number for 3 months worth of pendings to be up 48% over last year for those 3 months. And then listings up 24%. The listings started to come back. Why are the listings coming back? Look at prices. Prices up 11% in the third quarter compared to last year. That is a big, big number. We'll talk about that in a few minutes, but that number is what's driving more people to come in with listings. All right, we have 5 takeaways for you about the market. First takeaway is about sales. Sales have almost caught up to last year. They're not quite caught up to last year, but they are getting there. They are getting there, and they will get there by the fourth quarter. You can see here, this is a graph that shows the rolling year sales trends for all the counties for as far back as we have data. We have data in some of the counties going back about 10 years, other counties going back about 7 or 8 years. You can see that the trends are generally up. Then they took a dip last quarter, and now they're coming back up in most places. The one exception, if you look, it's there's actually 2 yellow lines on this graph. I don't know how I did that. There's 2 yellow lines. The upper yellow line is Hudson County. Hudson County is behaving a little differently from the other suburban counties because Hudson County, being Manhattan adjacent, itself is very dense. So it's not quite as hot a market as the more traditional suburban markets. We have this situation here where the suburban markets are much hotter than the urban markets, which has not been the case for like 20 years. And so what we're seeing in Hudson, and by the way, we're also seeing it in Bronx County, where we have offices, is that's a little softer in the Manhattan adjacent counties than it is as you get further out into the suburbs. So you have seen a decline that it doesn't come back yet in Hudson County. Takeaway number 2, pending sales promise record closings in the fourth quarter. Remember, third quarter pendings, they get into contract. It takes them a couple of months to get from contract to closing. You got to get the title done. You got to get the mortgage. You got to work out all the details. You got to get moving and stuff, all that ready. All right, all that gets done. You close in the fourth quarter. So all those opens from really June, July, August, and September, most of them haven't closed yet. They're going to close in the fourth quarter. But look at what we see here. 2020, going into the first quarter, was tracking January, February, March ahead of last year. The market was stronger now than it was last year. We had more pending deals. Then you can see seasonality last year in 2019 drove sales up in April and May. Big increase in pending sales in April and May last year, which is the normal seasonality in the market. We get a lot of, that's the spring market that we always talk about. That's the hot part of the market. And then pendings last year then came down in June, July, because people, they buy more homes in the spring than they do in the summer. They get into contracting more homes. But then you can see where the lines cross in June, where June pendings, July pendings, August pendings, way ahead of last year. We almost had like this delayed spring market that got pushed into the summer because of all the suppressed demand that we had in the second quarter. So you can see we've been tracking so far ahead of last year in pending deals in the last 4 months. And those deals have to close. They're going to close in the fourth quarter. They're going to drive sales up. We might have the biggest closing quarter we've had probably in 20 years. I don't know when the last time we would have seen something. We'll see what the numbers come out, but it's going to be historic for the fourth quarter. Takeaway number 3, prices are up sharply, not as sharply as they look. Look at these numbers. The change from the prior year quarter in average sales price regionally was 10.7%. That's pretty big. That's a big number. Anytime you get into double-digit appreciation on real estate, you're talking about something really big. It wasn't as big in all the counties. You can see Hudson, not quite as up as everywhere else. And that's, as I said, Manhattan adjacent counties didn't have the same experience. But most of the other places had double-digit appreciation. Now, a lot of that is organic. As we said, we had a lot of suppressed demand that people that were ready to buy a house in March, and then they were held back from buying a house in April, May, June, and then they've come back into the market. All right. That's going to drive prices up. We have the demand coming from Manhattan. That's going to drive prices up, particularly because those buyers are higher end buyers, most likely. So prices are going to go up, and we have limited inventory. So when you have inventory being down and pending sales and closings being up, that inventory gets even lower, and that creates more demand, drives prices up. So a lot of those price increases are organic and they're legitimate, and we can think of them as real. In fact, if you look at the change from the prior rolling year, that's a longer stretch. That's a bigger data size. And you can see that for the year, we're up 6% in the region, and up and down, depending on the county, down a little bit in Hudson, actually, if you take everything all together, but up in most of the counties, but not as up as, we are regionally at 10.7%. But here's the thing. Some of it is a little bit artificial. And the reason it's artificial is what we're seeing as a change in the mix of properties sold. Right now, and it's been the case for like 5 months, people of means, people with more money, people with more cash flow are more likely to be able to close on a real estate transaction right now than people who don't have the same kind of means. It's just natural, right? I mean, we're in still a very difficult, challenging environment, both economically and personally. Just dealing with life is very tough. And so it helps if you have a lot of money to be able to do the movers and do all the things and have a little more confidence about going forward. So what we think is that within each county and within the region, the people who are closing on homes right now are people who are proportionally just a little bit wealthier than people who aren't. Someone who's buying a $1.5 million house in Bergen County is more likely to have the wherewithal to be able to close on that transaction than someone buying a $500,000 house. Again, these are averages. I mean, there's exceptions in every rule, but the basic idea is that the more money you have, the easier it is to do a transaction right now. And so what we're seeing is that people with money, a lot of money, they're more likely to be able to close, which is changing the mix of the properties sold this year compared to last year, which is driving the average price out. And what's our evidence for that? Go look at the Bergen condos. Why would Bergen single family be up 13.8% and condos up only 4.4%? 4.4% is pretty good, but compared to single families, not the same. And I think the reason is that condos have a narrower range of pricing. So, and they're at the entry level price point anyway. So you're not seeing the skewing of the average by a bunch of high end properties that sold this year disproportionately to where they sold last year. And we saw the same thing in Westchester and Hudson Valley as well. Same idea. The condo market's not up as much as the single family markets, which means that, what's the base appreciation level in the quarter? Well, Bergen condos up 4.4%. It's probably a little bit better than that, but I don't think it's at 10%. That's not real appreciation we have right now. It doesn't mean that if you are a homeowner in Bergen County, a single family homeowner, that your home suddenly became 14% more valuable than it was a year ago. It's up, but it's not up that much. What it means is that there are a lot of your neighbors who have expensive homes were able to close this quarter more than last quarter. So that's the explanation for why prices are up sharply, not as sharply as they look. Listings, though, up from the second quarter. Takeaway number 4, listings are up from the second quarter. You can see the same graph that we had for pendings is for the listings. These are new listings in the market. You can see we were tracking through February, basically where we were last year. March fell off because the last half of March, nothing got listed really. April hit a bottom, was still well below last year in May. And then starting in June, listings started to outpace last year, and they're continuing to outpace last year. I think they'll continue to outpace last year. And the reason is that with prices up, that brings more people into the market. Basic economics 101, right? You have demand. If you've got fixed supply, prices go up. When prices go up, supply comes up to meet demand to stabilize the price point. That's what we're going to see for the rest of the year. More listings come onto the market, but not yet, because the second half of takeaway number 4 is that inventory is still low. We measure inventory by looking at the number of homes for sale in a particular market, right? So we get the full inventory of homes for sale. And then we say, okay, how many homes do we sell every month on average in this market? All right. And then we say, okay, well, if we sell this many homes every month and we have this many homes to sell, how many months would it take us to sell out this inventory if we never got any new listings? And that's the months of inventory. So theoretically, it's the idea that if it would take us 10 months to sell out this entire inventory, that's considered to be high. 6 months is considered to be kind of a balanced market. If you're at 6 months, nobody's got a real advantage. Below 6 months, you don't have enough inventory for the demand that's going to drive prices up. If you get over 6 months, you start to get a little flabby, you get a little soft, and it becomes more of a buyer's market. There's not as much competition, more listings than demand. So you see where we are right now? Everybody's below 6 months. You can see we were all well up. 2015, we're up 7 in some markets, up to double digits in other markets. Inventory has been going down for 5-6 years now, and it's really hitting some lows. You can see where Bergen single family is really low. The other counties all down below six months. So inventory is still low. I think it will get better because I think that we will start to see more listings come on the market, but it hasn't happened yet. And it's really, you always say it's a good time to sell. It's a good time right now. There's a lack of inventory and prices are going up. And takeaway number 5. This is really an extraordinary thing. Even with price increases, homes are still more affordable than at any time in a generation. And what do I mean by that? When people talk about affordability of housing, too often they focus on the price of a home. But that's not the way people buy homes. People don't buy residential homes for cash. Most people don't. Most people get a mortgage, which means that the affordability of that home is a function not of the price of that home, but of the payment they have to make for that home. And payment is a function of the price of the home and the amount you put down. But let's put that aside for a moment. Let's just keep that constant, 20% down. It's the price of the home and the mortgage rate. Price of the home and mortgage rate creates a payment, and that payment determines your affordability. You can afford to make a certain payment. Your mortgage professional will tell you that under the guidelines, they will allow you to borrow enough money to make a payment of this amount. And then you know how much house you can buy. And if rates go down, you can buy more house. Rates go down again, you can buy more house. Rates go up, now you can buy less house because your payment went up for the same price of the home. So affordability is measured not by price, but by payment. So what we did was we said, well, let's look to see affordability over time. So we took the average price for every market that we're in, the average price for every year that we have data. And you can see from this graph that we've got Bergen average price data going back to 1985. We've got Passaic going back to 95. The other counties only going back to 2010. We said, okay, let's take the average price for housing in that market for each year. Then let's go to Fannie Mae and get the average interest rate that was prevailing during that year. So the average interest rate that people actually got for their loans every year. And then calculate the monthly payment for every year. So now we have the monthly payment for every year in Bergen going back to 1985. The average payment somebody would have to make to buy the average priced home at the average interest rate for the year for every year in Bergen County. And then we factored in inflation. Because you can't just put everything in nominal terms. You got to actually figure out what it would be in today's dollars. So we're looking at the change in affordability over time. And what we've discovered, and this is true nationwide and really true in our market in Northern New Jersey, as well as the other markets we service in Westchester and the Hudson Valley and Bronx. The monthly payment you have to make to buy the average priced home in any county in our market is lower now than it's been in a generation. Let's just look at Bergen County because we have the longest time frame there. If you go back to 1985, you can see that for a period of time, and if you had the Westchester data, we have gone back to 81, and that line was going up from 81. So really 81 to 88, that line went up because prices were going up. It was a seller's market through most of the 80s. Then you can see it tops out in the late 80s, goes down because prices were going down. Then it starts to go up in the late 90s again, peaks again in like 05, 06 at the height of the last seller's market because prices were going up so much. Then it falls off a cliff because we had that 18-month period where prices went down like 30% over 18 months. And then it's continued to go down. Even though prices have gone up over the last 7 or 8 years, they've been slowly going up. Not a lot, but they've been slowly going up. But interest rates have been going down. So the payments have been going down. As a result, look at where we are in 2020 quarter 3. The monthly payment you have to make in Orange County, if you go across the graph, looks to me to be about 2,200, maybe 2,250, something like that. And look where it was in 05 at the top of the market. It was like $4,200. $4,200 versus $2,200. It's almost double in 2005, 2006 to where it is today. Now that's real, that's legitimate. That means in real terms, inflation adjusted terms, the monthly payment you had to make to buy an average priced home in Bergen County in 2005 is almost twice what it is today. That's what we say when we say homes are more affordable than they've been in a generation. That's what we mean. That number right now, 2,200 in Bergen County, is lower than at any time that we have numbers data going back to 1985. Now, this is just your mortgage payment. Your taxes might be higher, your insurance might be higher, all that's true. But for the monthly payment you have to make, it's lower. And it's significantly lower than a lot of those periods. And it's true about all the other counties as well. You can see they all kind of track the same, Passaic follows the same rhythm that Bergen does. We don't have data going back as far for these other counties, but you can see at least in most of these counties, it's lower than it's been in 10 years. And we can presume that, you know, Morris, Essex, Sussex, they all kind of follow the same pattern that Bergen and Passaic did because the big driver of this is interest rates. The only exception is the green line, which is Hudson, because prices have gone up so much there over the last 6 or 7 years that monthly payments are a little higher than they've been for the last 6 or 7 years. But I would be interested to see if I had the data going back to see whether they're lower than they were historically. But you know that Hudson has been acting like Manhattan. I mean, it's had a big run the way Manhattan's had a big run over the last the last 20 years, really. And you can see the interest rates. I mean, interest rates really just as I say these words, interest rates are below 3% for a 30-year fixed rate mortgage, which is unheard of. All right. And you can see just even how far it's fallen in the last year or two, in the last year, that we keep saying rates are at historic lows and they keep blowing through the bottom. And that really does make a difference. And it makes a difference for buyers and sellers. It's good for buyers, it's good for sellers. Why is it good for buyers? It's good for buyers because they can afford more home on the same payment. If I'm going to make a $2,000 payment, I can afford more home. It's good for sellers because it means that you can get a higher price for your home than you otherwise could, and the buyer is not paying anything more. The buyer pays the same payment, seller gets more for the house. You know, there's an interplay there, but the basic idea is that low interest rates drive housing growth and drive good results for everybody. So we're really living in a very good time to buy and sell homes given where rates are. All right, let's go through each of the counties just very quickly. Here's the regional report. You can see the green line is sales. The black line is prices. You can see prices on an average. They're trending up since 2015. These data doesn't go back as far as some other places. But sales, which were going up, fell off a cliff and they're starting to recover. Here are each of the counties. You can see at the top, you can see where there's a kind of an overview of the market. And then there's a graph that gives you some trend points that you can look at. So you can see basically all the counties essentially behave the same. Here's Bergen. Here is Passaic. Again, prices going up, sales came down, now they're coming back. Same story in Morris County. Same story in Essex County. Same story in Sussex County. And the one exception we get is Hudson, where sales are trending downward right now because it's feeling the effects of the slowdown in Manhattan, as we talked about before. Now, thank you for watching. Again, you can go to hhrr.link/QMRNJ to get a copy of the full report, which has a lot more information than I was able to convey here in this webinar. But I hope you got something out of this. And so please go get a copy of the full report, or go to your agent who may have sent you this and get the report from them. We hope you enjoy it. It's a service we provide to all our clients, so we hope you get something out of it. If you have any questions, go to your Rand Realty agent. I'm sure that he or she can answer them for you. Otherwise, if you did have questions that you want to put in the chat, you post them in the chat, and we will try to get an answer to you as soon as we can. All right? Thank you for watching. I hope you have a great day.